Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody, guys. Today we again will take a look at the euro currency. Unfortunately, not because euro currency prepares some really valuable setup, but just to update the situation that we have here. The situation is really not very fascinating, since market has stopped again at the level where it was stopped previously multiple times, and this moment doesn't promise us something really brilliant and something really interesting. We could turn again into some whipsaw action on the weekly chart, and that will make really difficult trading of the euro currency in the nearest perspective. So in a very short-term perspective, as you can see, market holds relatively bullish potential, because by taking a look at this A, B, C bottom pattern, market has hit 100% extension. Previously we have discussed the possible taking out of this top. Market indeed has done this, but wasn't able to continue move high to the 1618 target of this ABCD, and again wasn't able to break through the 1480 area. Now it dropped, but why I talk about the relatively bullish setup? Because take a look, in general market is calling around the former top. It doesn't show any significant drop. That's why it somehow, at least theoretically, holds potential for a possible breaking out of this some kind of the consolidation, and maybe market will continue move high. So at least some hope exists. Maybe this will happen on the Fed Reserve meeting on the next week, if investors will hear some really dovish comments from the Fed, since currently most expectation stands around preparation of the markets to possible rate hiking in June. We know that, or better how to say, not quite we know, but we have discussed this moment in our recent research on the euro currency. There was the very nice analysis from the Phantom Consulting that we like to read. They put really interesting analysis, and they think that Fed will not rate hike in June. They think that the most aggressive policy from the Fed will be postponed on the next year. This will bring to some disappointment to the market, and this could become really the reason for significant volatility on the market, especially as closer to the June as we will come, since markets right now expect that the June will be the first month when the rate will hike, when the Fed will rise the rate. So if we will suggest that this will not happen, as the Phantom Consulting think, that this really could lead to the further action, and this meeting will happen already on the next week. Of course, this will happen as just unexpectedly. Fed will start to prepare markets to this idea, and first time when they could do this will be on the next week in the Fed meeting. That's why we think that it's not really, nothing is lost yet in relation to the possible upward continuation here. And market, as you can see, is coiling around this former top without any significant drop. That's why, as I said, this market keeps at least the theoretical chances on the further continuation. This looks relatively bullish. Why I do not like this level? Because, guys, you need just take a look at the weekly chart. I will show you. So take a look how often market was testing this level previously. So I will delete all indicators just to not confuse the picture. So take a look where this has started. It has started in the beginning of 2015. First test, drop. Again, this was in May. There's something retesting, trying to break this area even with the significant breakout, but then return right back down. That was in summer 2015. Test again, significant pullback in October. Moving again. So right now, market has finally again reached it. So it's multiple year. Market is testing this level for a long period, and it seems that it has insufficient reasons, insufficient context to lead to this breakout. Maybe if Fed will not rise rate in the June, that will be sufficient factor, sufficient issue that will help market to show the breakout. Or at least, as we expect, it will complete some minor target that we have on the daily chart. This really will be a very important moment for us on the next week. So currently, guys, as you can see, reaction yesterday was significant on the European Central Bank statement. Initially, as Mario Draghi has started conversation with the speech that European Central Bank will not take any additional steps, so will not change the rate. So market, in fact, have expected no changes. But then, at the end of the speech, it suddenly said that European Central Bank will keep the policy accommodative as long as it will be needed, and it ready to apply any tools that they have in their arsenal to support the economy of the European Union, and it means that they're ready to impact on the strength of the currency and to drop it again. So this was has led to this significant drop. As a result, we've got the bearish grabber that suggests the taking out of these lows. That's why, guys, we will not take a look right now too far in the future because it's mostly right now we're expecting the Fed meeting next week. So, but in a short-term perspective, today, since today is Friday, guys, hardly market today will take any significant action. But the chance exists that market will drop lower and hit final significant support. As you can see, this will be confidence support. On the follow time frame chart is 12.16. This will be monthly pivot point, as you can see on the daily chart. It's monthly pivot point. And also, guys, this will be weekly pivot support one. So probably as a result of this bearish engulfing pattern, it's approximately the target equals the length of the bars. So approximately will be this area. So I could assume that market really today could test this level. So just as a continuation of this recent drop that has started, this market has some pause in this action. Right now is continue move higher. Hardly we will see any more significant action today. So probably because investors already keep in mind the future on the next week, the Fed meeting, and this will be very important because it will be almost in May, and then in June this will be the next meeting where the rate decision should be announced. So this in effect not much time where Fed has to prepare market to the moment that they will not hike the rate in the June. So that's why it could be really drastic Fed meeting on the next week, and investors already keep in mind that that's why hardly they will take any significant action on today's session. So, but this drop is possible to this area. So let's see how euro will behave today.